Okay, we're going to take a look at May market data for Central Ohio. Danny's been kind enough to pull numbers again. And overall trend, just to give you a brief snapshot, overall trend is as expected. We're up in nearly every metric, making it a hotter seller's market, almost as hot as all-time high. But we'll go through it as we go. So Danny, first thing we need to talk about, I think everybody's talking about, is the interest rate. How's that moving? How's that been moving for us?
The interest rate is boring because it is still oscillating in the same zone that it has been, right? So mid 6% range, it's going up a little bit and then down a little bit and then up a little bit. But you can see on the graph here that we really peaked at 7% late last year, and since then it's come down and then really just kind of bounced around to the point that it's almost predictable, right? So I think there's some people that have really just kind of come to grips with that, and we'll see that maybe in some of the other numbers here as we get into the presentation. So 6.71 is where we pulled it as of last week.
Yep, and that's on the higher side of historical, or at least what we've known recent history. But everyone's getting used to it now. This is our current reality. So this is being reflected in the next metric that we have, which is the number of homes sold, which is up significantly over last month. Danny, you want to run us through?
It was interesting last month. We expected, spring things were going to start heating up again. They always do. And even though things are maybe depressed a bit year over year because of the rate, everybody's been talking about it, you can't escape the seasonality. You see that here in the chart. Winter, everything kind of slows down. And in the spring, things heat up. So that's what we had seen, up. And then all of a sudden we had last April, things did not go up all of a sudden. And we said, boy, I wonder what's going on with that. And I wonder what May is going to look like. Well, May came roaring back. You see the trend line continues to go up. Almost 2,300 houses were sold in May. What's interesting is that's up almost 25% month over month, down only 8% year over year. And every month that we've been doing these run-throughs, we've been saying this is off 25% from the last year. This is off 30% from the last year. So I think that really helps to underscore how big of a rebound this is as we start to get into the summer months.
Yeah, and to keep in mind, last year, this time, everyone's trying to beat the rates. Everyone's trying to grab up houses while the getting is good. I would say in recent memory, that's the hottest market that we've had. Last year, this time, hottest market we've had, we're 8% down off of that, which is a very good indicator because if you look at the numbers from 2 and 3 years ago, it's about where we are right now. So we're strong. We're fully back. It's a seasonality thing for sure, but we jumped quite a lot this past month. Another way this is showing that it is a seller's market is the percentage above asking. The number of houses, rather, percentage of houses that sold above asking has grown again.
Last June, like you were saying, we had all that activity. It was not uncommon to have multiple offers on every house, multiple cash offers. Things were going gangbusters, and that just drives more competition, people going above asking. We saw that in this chart at that time, with that green band being very big and the orange being very small. There were very, very few opportunities where you could get in below asking. It was just very few and far between. And now what we started to see last month, that orange and the green kind of balanced out, the above and below asking. And now all of a sudden, the green is growing again. It's twice as big as the orange. The competition's back, really. So if you're a seller, that's great. If you're a buyer, be prepared to make an offer that can win, right, in this kind of a market. And that's the kind of advice I imagine you've been giving some of your buyers lately.
Yeah, and for some of them that have been hanging in there for a long time, I've had buyers that started actually last fall, took a break over the winter. Obviously, it was a depressed market, or it was at least a lot slower than what we've been seeing. They had to make some decisions this spring. They did get in contract. They did sell their house and close on the next one, but they did it without inspections at all. And then the offer that we received also had no inspections. We had a number of trade-offs there, which is typical of the hottest markets. Now, apparently we're back to that. The next graphic here is kind of something we've been following the most closely. I think this is the best indicator of the market overall, and that is the average sales price being above the average asking price.
Right. And you see how those lines have crossed over, right? We've talked a little bit about that in our prior months where we've done reviews, the list price always is informed by recent historical sales. You have to base wherever you price that house on comparable homes that have been sold. And the more recent, the more accurate and the more better. And so that's what we've seen here is the orange line always kind of chases behind the blue. And as things started to trail off, all of a sudden there was less competition. People had to start reducing prices. And you see that happening back around August where those lines crossed over and that sold price line goes below. Now in recent months, we've started to see as things have heated up again. The sales prices are going back up, which means list prices are going back up. And all of a sudden we're getting more competition, which is driving people in some cases and actually many cases to make a highest and best offer that may be even above asking. And so that's what you're seeing here. They were almost exactly the same for the last 2 months at equilibrium. And now the orange line has broken back across. And again, that's a pretty clear indication that the ball was in the court of sellers.
Yeah, I think that's our strongest metric to make a case for the seller's market. It's been below the past few months, and I think that was more of a product of everyone getting used to the idea of the rates being what they are now. People are waiting for them to come back down. I don't think that's happening anytime soon. I think most people are in agreement with me, and they're now dealing with the new reality. So there was a period where everyone was looking, and the rates shot up on them. Those guys all stopped. So we saw that before. It's an affordability factor. Why move if you don't have to? But there are other reasons to move other than it's just cheap interest rates. So people getting married, people having kids, starting families, different situations, whatever, first real job, right? A lot of first-time home buyers entering, picked it back up. And this is the new reality they're dealing with in the sixes interest rate. And we're just a hot market right now. Another indicator that it's a seller's market, hot seller's market, is days on average is below even what we saw last month, which was the lowest we've seen in 6 or 7 months, right, Danny?
Yeah, so that's come down quite a bit. You can see there both in terms of the average days and the median days on market. Again, it's just a sign that there's demand more so than supply. And really what this tells us is looking at what's currently available on the market today, around 1,700 homes in our market, that's only 3 weeks of supply. That's not a lot. That is, things are going quickly. And again, that favors our sellers.
Yep. And Columbus is a nice place to live. We've been growing for a long time. We're getting news of more growth coming. We're a growing market for sure. We're still an affordable market, and it's going to stay a seller's market until we get some supply to catch up with the demand. And that's not happening anytime soon. You can't instantly increase the supply of houses. So the last number, sales with price reduction, almost, it's not zero, but it's significantly less. And again, that's as expected in a seller's market. I think the main takeaway from this whole thing is we're hot, guys. We're going to continue to be until the supply and demand, the very basic factor of economics, until that balances, we're going to be a hot seller's market. So keep that in mind. Danny, do you have any closing thoughts for us?
Yeah, I think one of our concerns last month was around, whether we were too supply constrained. And if that was one of the things that caused the overall sales for the month to be lower in April than they were in March. I don't know. It doesn't look like it based on May, right? Coming back at the level we are. Last month, we recorded this and we had three weeks of inventory at that point. So I don't know. I would agree, though, that summertime is here. This is very encouraging. Our market is very much active and getting back to where we were and picking up where we left off last year.
Yep. And last year was, again, in recent memory, at least, all-time high. All-time highest for prices, for sure. All-time hottest market. We'll see more of that for a while. I would like the market to balance out a little bit, but we'll have to see how that goes.
Yeah, and I guess the one other thing that we glossed over on the sales data slide that I did want to call out is the amount that things are up now. I mean, the average sales price from this time last year is up almost $15,000. So if you're sitting in any house right now, that equity continues to grow year over year. So even if you're not selling this year, you could still be a winner, right? Because you're adding equity year over year at a very, very fast clip.
Yeah, that's right. We did fail to mention rather, just how high that price is. That's at its all-time high. That is at its all-time high on average. And it's still growing. Looks like we're going up from there. So we've heard some stories, at least I have, about buyer's remorse and things like that. You can change your mind if you want to. You're in a positive position typically. We've been growing nonstop for the past, 10 years since the recession before. So we'll see. Unless something catastrophic happens, we're on an upward trajectory, and I expect us to level out when supply comes back. I'm welcoming that. That's a positive thing. Makes it a lot easier for everybody, I think. Until then, we're just on fire. So thanks for pulling numbers again, Danny, and we will see you next month.